All right, good morning, traders. Today is February 18th, 2026. My name is Coach Kerrigan. I'm lead instructor here at the BYOB Trading Room. That is the day trading division of the Hit and Run Candlesticks family. Thank you so much, everybody out there in podcast land, digital land, cyber land. Thank you for subscribing, following, and liking my content. Thank you for all the kind words. Special shout out, Bob Jordan, John Jordan, Kathy Sarah Roasted for sharing the content, helping get the good word out there to the World Wide Web. Appreciate that. Love that. Thank you so much. Let's take a look at SPY this morning. Before I get started, think I got an announcement. Yeah. All right. So we got member e-learning like we do twice a month. Okay. So that's Thursday. Starts at noon. If you don't see me here in the room, this is for members only. If you don't see me here in the room, that's because I am in the combo room. Now, to get to the combo room, you just log into your Hit and Run Candlesticks website right here. And you go from, let's say you're an RWO member, you go over to the combo room here. If you're a BYOB member, come on over here. You log in there to reach this page. This would be the combo room over there. You're in the BYOB room right now. Just click this, and this will open up a new thing on the browser, and you'll be able to get into the combo room. All right, and all of those videos, by the way, are located under resources, e-learning replay. All right, so you take a look at this. Are some of our past. You got 3 of them. You got one from me, one from Doug, one from Rick. All right, there's 10 to a page. There's about 34 pages there. So that's 340 videos. Roughly close to an hour long, probably. All right, and then if that's not enough, we got public e-learning. Again, 10 to a page. Excuse me. And you got 20 pages. It's another 200 out. 200 videos right there. So a lot of videos. All right. If you want to look at them, review last Thursday's not last Thursday, but the last members only webinar. You just come up here, go to public webinar right there. Okay, so that's that. All right. So again, that starts at noon on Thursday. That's the 19th. That's tomorrow. Okay, Doug's going to start at noon. I'm not sure if Doug's going to be here. Ed may present for Doug and Rick. I don't know if Rick's going to be here either. Okay, so I start at 1 o'clock, so we'll see what happens. All right, so again, thanks for being here. My SPY pivot this morning, 679.75. Above it, I'm a bull. Below it, I'm a bear. Diamond Dow, yesterday, inside day, lower high, higher low. Closed under a bearish trap and over the 17 EMA. SPY, Stinker, and QQQ made lower highs, lower lows, closing under bearish traps under their 17 EMAs. IWM, another inside day. That's 2 in a row. Look for a breakout on IWM. Closing above the bearish trap. All right, over the 17 EMA. SPY closed with a 2-hour downtrend, 10-minute downtrend. Silver and gold, lower highs, lower lows yesterday, closing under bearish traps under their 17 EMAs. Excuse me, people. USO in a daily uptrend made a lower low and a lower high, closing under a bearish trap under the 17. UNG, lower high, lower low, closing under a bearish trap under the 17 as well. US dollar index in a daily downtrend, closed near the 97.13 area. SPY max pain for today, if they haven't changed it on me, 682 with a put to call ratio of about 1.1 put for each call that expires today. If this is your first time seeing this, these are all in bullish daily uptrends over the 17. These are all in bearish daily downtrends under the 17 EMA. So over the 17 EMA, under the 17 EMA. If they got a star, they're building out a launch pad or a bull flag from which to launch higher. If they got a star over here, they're building out a bear flag or a platform from which to dive lower. So we'll see what happens here. So I think AMRX had a breakout yesterday. They had a star the previous day, and now they're breaking out. They broke out yesterday. So we took the star off because they're already breaking out. All right, SPY. Sorry, on the 10-minute chart. As you can see, you got the sticks and the 3 riding underneath the 8. Okay, the 8 is this white line right here. All right, that's the 8 EMA. The yellow line is the 3 EMA. So you got the sticks and the 3 riding under the 8. So we got a 10-minute downtrend coming into the close. More like consolidation, really. But a 10-minute downtrend coming into the close yesterday. 2-hour chart. You got the sticks and the 3 riding under the 8. Okay, so we've got, you can still see space or air between the 3 and the 8. So 2-hour downtrend coming into the close yesterday. Daily candle, lower high, lower low. Closing under, see the 3 EMA closing under a bearish trap. And closing under, see the dots, they turn from green to red, back to green right here, and then back to red. Okay, so those are the 17 EMAs, those dots. So when price is underneath it, it turns red. When price is above it, it turns green. So you can see we're under the 17 EMA. We closed yesterday. Closed at the top of the body of this candle right here. So there's SPY on the daily chart. Weekly chart, you can see here's the April origin of the move on the weekly chart. You see all the green dots. So we're bullish, still in an uptrend. Nothing's broken yet. Okay, on the monthly chart, you can see right here. See all the green dots. Okay, still bullish, still in an uptrend on the monthly chart. Nothing's broken there. On the daily chart, pan way out. Here's the April origin of the rally up there. You can see we're consolidating up here at the top of quadrant 4. So that's bullish. Anytime I'm in the upper third, that's going to be bullish. And you can see we got a low and we made a lower low, so we're in a downtrend. So SPY in a daily downtrend, all right, but bullish up here at the top of quadrant 4. So there's SPY. Let's take a look at SPY game plan and look at that on the 15-minute. Pan this out. All right, SPY game plan. Green erases red up over 684.70. Okay, that's a green erases red entry. You can see we're already up there in the pre-market. Pivot 679.75. Above that, I'm a bull. Below that, I'm a bear. Red erases green entry underneath 675.75. Okay, so pivot 679.75. I like 2 days and 9 days till expiration Friday options on the multiple of 5 specifically for the open interest. All right, I like a tight bid-ask spread, like maybe a penny, 2 pennies wide. All right, I don't want a lot of slippage. All right, when I get stopped out. I like strikes $2 to $15 out of the money. Okay, I'm not going to get the performance that someone who buys in the money options gets, all right, receives, because in the money options, you're going to get that penny for penny performance in your option. In other words, the underlying security moves 5 cents. Your option will probably move 5 cents, whether it's in your favor or against you. But for the most part, it kind of pretty much tracks the whatever's going on in the underlying security. Okay, I like 10-minute uptrends over VWAP. I like 10-minute downtrends under VWAP. Okay, so back to the strikes here. My favorite price point, all right, for me, the sweet spot or my preferred range is options that are somewhere around 30 cents on up to $1.20. If they get more than $1.20, it ties up quite a bit of my capital. All right, and the idea, I only trade with 10% of my trading account.
I'm not quite sure how to help you with that.
Yeah, that's Alexa. So I only trade with 10% of my trading account. All right, so I don't have a lot of capital to commit to in the money options. All right, so I'm willing to give up some of the performance so that I can maintain less risk in the market. All right, so for that reason, I like the out of the money options as opposed to in the money. Now, if you want to trade in the money options, it's fine with me. All right, my daily goal is 1%, which is going to be 1% of my whole trading account. So that's $400. That's what I have to make for today. Okay, so it constantly increases and changes as my account changes. So every day, 10%, daily goal, 1%. All right, so on those strikes, like I said, my sweet spot for the strikes is somewhere around 30 cents per contract or 30 cents per share, right on up to $1.20. All right, I like 10-minute uptrends over VWAP. I like 10-minute downtrends under VWAP. If I get a 10-minute downtrend that manifests up here, up above the red erases green entry, I'm not opposed to trading it. I just like to see it break the bearish 10-minute rubber band candle. Same with green erases red. If I get a 10-minute uptrend over VWAP, all right, that happens to manifest down here, all right, long before it gets to the green erases red entry way up here, okay, I'm not opposed to trading it as long as it breaks that bullish rubber band candle on the 10-minute chart. Okay, so there's SPY. The SPY's got a game plan. QQQ got a game plan as well. Let's take a look at that. Pretty much the same thing as far as the options go that I like. Green erases red over 604. That would be the high for yesterday. Red erases green underneath 693.30. That would be the low for yesterday. In the pivot where price seems to come back to the same spot over and over throughout the day, it's 598. All right, so above that I'm going to be a bull. Below that I'm going to be a bear. Again, I like the same options. I like 2 days till expiration and 9 days till expiration. These will change, but specifically it's talking about the Friday options on the multiple of 5. They tend to have more open interest. Again, I'm looking for less slippage, tighter bid-ask spread when I buy my options. Again, I like the strikes $2 to $15 out of the money. Again, I don't get the performance, all right, that you would from an in-the-money option. And I'm willing to give up some of that performance so that I can take on less risk. All right, so for that reason, I like the out of the money, and not to mention they are much cheaper than the in-the-money options, okay? If you want high performance option, you're going to pay more for it. It's just like a Ferrari, all right? You want a high performance car, you're going to pay more for it. Okay, it's the same thing with the options, all right? So again, I like the 10-minute uptrends over VWAP. I like the 10-minute downtrends under VWAP. Okay, so that's QQQ game plan for today. Let's take a look at QQQ on the 10-minute chart. And we'll come on over here. And you can see coming into the close, you got the sticks. Okay, you see the sticks and the 3 are riding underneath the 8. So we got a 10-minute downtrend coming into the close from yesterday on the 2-hour chart. We've got the sticks and the 3. You got some space between the 3 and the 8. So we got ourselves a 2-hour downtrend coming into the close yesterday. On the daily chart, lower high, lower low, closing. See the sticks and the 3 underneath the 8, riding underneath the 8 there. So that's a daily downtrend in progress, okay? You got a low, and we made a lower low. So that puts us in a downtrend. Got a low there. We made a lower low. So daily chart is in a downtrend. But if we pan way out, okay, this is our April origin of this whole rally. We're in a bull flag. See how price moves up and over to the right. Okay, so we're in a bull flag up here right now. We're in the middle of quadrant 4, so that's bullish, all right, but we're in a daily downtrend, okay? So that's what it is. It's making lower lows, so and you got lower highs. So you see a lower high there, and you got a lower low, another lower high, and a lower low. So bullish, but in a daily downtrend currently for QQQ. All right, let's take a look at the weekly chart. You can see right here we haven't made any lower lows. That would be the low to beat, the one that pokes through the 17 right here. We haven't taken out that low yet, so we're still, see all the green dots? We're still in a weekly uptrend. You can see price moves up and then over to the right. Okay, on the monthly chart, same thing. See all the green dots? Okay, this would be the April origin of the rally. Price moves up. Okay, you can see we're still in an uptrend here on the monthly chart. Okay, see all the green dots? So still bullish and in an uptrend on the monthly. Same for SPY. Still bullish and in an uptrend on the weekly. Same for SPY. Okay, on the daily chart for QQQ, again, in a downtrend, all right, but bullish because it's up here in quadrant 4, still holding the higher ground, okay? That's the reason it's bullish, all right? Because it's pulling back, that doesn't make it bullish. And even if it were going up, it wouldn't be bullish, all right? The point is it's located at the higher ground where price rallies up, and now it's holding this area as opposed to moving up and giving it up, all right? So we're still bullish, all right? But we're currently in a daily downtrend. There's QQQ. Let's take a look at IWM. All right, IWM on the daily chart, another inside day. Okay, see, lower high, higher low, closing inside. I got to read this. Closing over a bearish trap and over the 17 EMA and underneath the all-time high anchored VWAP, that's a pink line. So they haven't made any lower lows on the IWM. And notice they're kind of in the upper part of quadrant 4. So they're still bullish anytime they're in the upper third of the quad lines. Okay, so they're in the upper third. So they're bullish and still in an uptrend. They haven't made any lower lows. They made a lower high, but yet to make a lower low. So there's IWM. Bullish and in an uptrend. Diamond Dow. Okay, you can see about 5 days ago they put in a new all-time high. Okay, Diamond Dow got another inside day, lower high, higher low, closing under bearish trap and over the 17 EMA, under the all-time high anchored VWAP. Again, top of quadrant 4. They haven't made any lower lows here on the daily chart. Now here's the origin of the rally back here in April, and they're still moving up, so they're bullish and still in an uptrend here on the daily chart. Give me just a second. I'm going to take something for my cough. All right, let's go and look at Stinker. All right, so this is an ETF or an ETN, okay? And they have 10 of the most heavily weighted securities in QQQ and SPY. Now, when those 10 of those heavyweights move like a pack of wolves, all right, wherever they move, all right, they'll drag the indexes with them most of the time, all right? So you can see FNGU, all right, has started their rally back in April, same spot again, and they made their high back in, call it November, all right, so beginning of November. Since November, they've been melting off, all right? Now, notice right here, that would have been above the crosshairs, that would have been the upper third. Okay, so this is the all-time low, that's the all-time high. Okay, if they'd have stayed in the upper third, they would have been bullish. They got down here once, right here, in November, and the bulls came in and rescued the price. The problem is the bulls failed to make a higher high. All right, so they still maintain a downtrend. You can see right here we got a lower high and a lower low. So we've been in a downtrend ever since that lower high right there. So actually, since they made the lower low, really. But you got a lower high, lower low. Lower low was made like a few days after. So what we got here is price, all right, has now hit support right here. Okay, and this is all the big cap stocks, all right? 10 of them, the most heavily weighted ones. We could get a bounce back to, see this pink line, the all-time high anchored VWAP. All right, we may get that far. I don't know, okay? We may get a bounce back to the origin of the rally anchored VWAP, which is this thin purple line. I don't know. We'll see, all right? I would expect it at least to pull back and check this low right here back at the midpoint. So I'm looking for a rally. May not all be green days, okay? Green candle days. Okay, so, but I'm looking for a rally that comes back to this 2061 area, okay? Which is, it's going to show up in the SPY and the QQQ. So over this week, as long as, GDP and the economics events don't, or reports don't disrupt this bounce back to this low right here, I'm expecting a price move up in both indexes there. Okay, so there's a good possibility you see the SPY rally up. We may even get to 700 this week or next week. We'll see what happens. There's only a couple days left in this week. So this is stinker, okay? And the reason I call it stinker is because while the market kept making new highs in the unweighted stocks, this one held price flat, all right? And had it just flattened out here, we could have made more new highs in the SPY. Okay, so you notice how price moves up and kind of over to the right. Had those just held flat up there, we could have probably made even more new highs, but we didn't, all right? Stinker sold off right there. So the point is, that's why I got its name. It prevented us from getting to 750, 700, all right? But now it's ready to bounce, okay? And we haven't sold off all that much right up here. So I feel like, 700 could be in the crosshairs this week. It's all dependent on the economic data and some of the earnings. But you can see how the high hits here, the high hits there, and the high hits there on the SPY. So we could be making 700, 710, maybe 720 sometime this week or before the end of February. I'm looking for that to probably happen. Now, it's all dependent on stinker bouncing. All right, it hit support. Doesn't mean it has to bounce. Could melt right through. All right, that would be odd for it to do that, but could melt right through. I don't think that's going to happen. I do foresee this kind of bouncing back probably at least to the 17, which is right there. All right, and I would probably want it to pull back to this tail on that spinning top right there, maybe even this long tail right there. So back to the midpoint would be a normal bounce. Most often, okay, price bounces back to not just there. This is just the short side of it, okay? Most often, price bounces back to this area right here, which would be the beginning of the upper third, okay? Now, that would be beautiful to get back there, all right? And I wish they'd do it real slow, all right? Not in 2 days. But it may happen they do it in 2 days. All right, but that's what I'm looking for, is for price to actually get here first If they hold this area, we'll be looking for this all-time high anchored VWAP and the upper third. All right, so we'll see what happens with the pullback. Again, as far as Fibonacci retracements go, this is the 618 right here, and I'll crank it up a little bit, see if you can see it more clearly. Okay, so this is the 618, that right there. So you can see we're right here at the 618 right now. That's a popular reversal area. That's why they call it a retracement to watch for reversals. So we'll be watching this for a reversal in this area over the rest of this week and probably the coming week right here for February, all right, for a reversal in the FNGU. Now, if they get going, all right, we could see SPY and QQQ, all right, as long as the rest of the market holds together. And I think they will due to the inflation numbers. All these companies are now printing more profits, which entitles them to a higher price per share because they're printing more profits. And it's easy to print more profits when you raise your prices as long as you're selling the same volume of goods and services. So I am really foreseeing probably a trip right on up to 700, 750. Heck, we could even get to 800. All right, if this thing rallies back to those highs, and it could very well rally all the way back to these highs with the AI, with the open interest in AI. Everybody wants a piece of AI right now. All right, it's in a rally. It's not in a bubble yet, but we very well could see price on these big cap stocks, which are heavily invested in AI, okay, rally all the way back up to this area right here, which is the prior all-time high for FNGU. All right, just saying that could see a really nice rally right on up to 800 on SPY or 750. We'll see. I don't want to get too far ahead of myself. All right, I don't want to pump out too much hopium. All right, but I just want to make you aware of what we could see in the near future now that prices hit support. So you see we have a inverse head and shoulders here. That is the neckline right there. And if you remember on T2123, that's a popular area for price to bounce. All right, and we'll visit that in a few minutes here. I'll take a look at T2123, show you where we bounced there on a neckline and produced a brand new all-time high. All right, so this is Stinker on the daily chart. Lower high, lower low, closing under a bearish trap, under the falling 17, under the all-time high anchored VWAP, under the midpoint. All right, so it's neutral, and it's in a downtrend. Okay, if they get below here, they're going to be bearish. All right, they'll be bearish if they get below the lower third. If they happen to start closing candles down here. But right now, we're neutral and still in a downtrend. So watch this one. When this one starts to flatten out, maybe start to curl back up, all right, it's game on for the market, all right? So it'll be looking good. So this is FNGU on the daily chart. All right, let's take a look at silver and gold. All right, so here's silver. I just want to show you the origin of the rally that produced this all-time high. Started back here in 2022. Yesterday's candle, lower high, lower low, closing under a bearish trap, under a falling 17, under a downtrend line, not in the upper third. This would be the upper third right here. Okay, that would be the upper third, not in the upper third, so we're neutral because we're not in the lower third here. Okay, that would be the lower third. So we're just neutral and in a downtrend. The question is, can they hold off from making a lower low? All right, for silver. All right, and then we get a bounce back to 80. We'll see. So there's silver on the daily chart. and it is neutral and in a downtrend. Let's take a look at gold. So here's gold. Gold made a lower high, lower low, closing underneath. You can see the 3 crosses under, a bearish cross, closing under the 17, closing under the all-time high anchored VWAP. But notice, again, same thing on this one. Okay, 2022, the origin of the rally up, okay, produced that new all-time high. Okay, so we're still in the middle of quadrant 4, so that's still bullish, all right, and it's hard to say. We got a low that came down here. It's like a 1 candle low. Really, I'd want to break this low. Technically, for breaking this low, they're starting a downtrend as of right now, all right, but that would only be like a 1 candle high. I'm not even going to count it. I'm just going to say they're still in an uptrend. If they break this low right here, they'll be in a downtrend. Okay, so price below 439, basically 440. Okay, they start a downtrend. Again, it's just a label, and they're still up in the middle of quadrant 4. Remember, this is the midpoint, so they're still bullish and in an uptrend currently. Okay, once they break this low right here,
hey, good morning, everyone. How you doing?
that's going to be a downtrend.
There we go.
Let me get this real quick.
There we go. Good morning, everybody. How's everybody doing here? Happy, what is it, hump day here, right? Hump day? February 18th,
Not sure why I have that going on.
Hello, Lisa.
I've
How
got
are
the
you?
speaker
Joe?
off.
How you doing, Joe?
Hold on just a
Hit this
second.
button right there. There we go. Hey, Tommy. Daryl, how's it going? Sonny, Gary, Santana. Hey, Bill. How are you over there in Right Way? Audio is on. I love it when it works, huh? Hey, Mark.
All right, we're back. All right, so there's gold, bullish, and still in an uptrend for gold. Let's take a look at USO. Thanks for bearing with me. All right, so lower high, lower low, closing underneath, bearish cross, or underneath the bearish trap, underneath the 17. Okay, notice on USO, we're still in the upper third, just barely. Okay, so that's bullish up there in the upper third, still in an uptrend. They haven't made a lower low. Okay, so that's USO. Nice comeback today. Let's take a look at UNG. Lower high, lower low, closing under a bearish trap. Under the falling 17, there's a low right here. They made a lower low, so they're in a downtrend on UNG. Okay, if we look at UNG, this is the 12-month high anchored VWAP. Okay, notice up here. Okay, we're down here in quadrant 1, so that's bearish because we're in the lower third. All right, and we made lower lows, so we're in a downtrend. We're bearish and in a downtrend on UNG. Okay, so there's the daily chart for UNG. Let's take a look at technicals. We'll start off with T2101. Okay, the market moved down again yesterday and participation decreased a little bit. That doesn't bother me. I just don't want to see people pile on, all right, when we start moving down. So there's participation. So you can see that the market's getting thinner and thinner right now, all right? Now maybe once FNGU pumps up, all right, we could see a little bit of a difference. So we'll see once they make the corner, all right, and start moving back up towards the midpoint. We'll see. That's T2101. That would be absolute breadth. That's also known as participation index in my book. All right, it's T2122. I was looking to be in the buy zone and maybe even the overbought zone. They had something different planned for me. And they came down here yesterday and made an equal low. Now, they failed to make a lower low, so we may find ourselves in the buy zone or the overbought zone sometime today because they failed to make a lower low, all right? So from here we made a higher low here and a lower high, and then we made a higher high from that. But as compared to the day before, we're still underneath that price action that was consolidating up there at those highs from the day before. The nice move, the nice attribute, or the nice, what I'm looking at here is characteristic, all right, is that we closed in the buy zone, all right? So we closed in the buyer's chop zone, so we're above the midpoint. So that's bullish, all right? Need to hold the higher ground, not keep giving it up. Notice price keeps giving it up. Don't want to see lower lows. I want to see higher lows like that. I like that. If we do and make lows, I'd like them to just linger here for a short time and then spend more time up here in the buy zone or the buyer's chop zone or even the overbought zone. So there's T2122. Not a complete disappointment, but not what I was expecting. I was expecting a little more action up to the buy zone and the overbought zone, but it is what it is. They closed the day on the north side of the midfield or the half court right here, or for T2122. That's bullish. Let's take a look at T2123. Okay, that's the all-time high right there for T2123. Was made just a few trading days ago. As of today, they got a high here, so they made a higher high. All right, and then they got a low. Well, then they, after making that high, then they made a higher low right here. And you can see right here they got a high and made a higher high. So they're in an uptrend still on the 15-minute chart. They're up over the 200 SMA. That's bullish. All right, and they're in an uptrend on the 15-minute chart. Okay, let's go take a look at the 3-bar chart. Back to that neckline that I was referring to on FNGU. Notice price pulls back to this. See, that's a multi-day neckline. See right here, there's a little head and shoulders pattern, and that was the neckline. And you see price rallies up and just decapitates the head for the head and shoulders pattern, okay? Negates the head and shoulders pattern. That's a bearish head and shoulders pattern, so it negates it by price elevating up over the head here on that head and shoulders pattern. So you can see right here, we come back down to the neckline and we bounced and made a new all-time high. Now, I'm hoping same thing happens in FNGU, because if that happens, we could see 800 pretty easily. All right, we'll see what happens though. Okay, so here's T2123. Okay, making new all-time highs just 2 or 3 days ago, and on the 3-bar chart, we're still bullish, and we're still in an uptrend. You can see prices up over the curling 200 SMA. We're at the top of quadrant 4, so that's bullish and in an uptrend on T2123. That's a cumulative 4-week new high, new low ratio. Stinker on the 15, okay? Like to see that. See that consolidation over prior consolidation. That's a bullish environment. Okay, what happens generally is price moves up and does the same thing again. Moves up, holds the higher ground, and builds out a string of stairs up there back to those highs. We'll see. I don't want to get ahead of myself, but this could be the beginning of the next rally or the next wave higher based on FNGU 15-minute, all right, producing consolidation over prior consolidation. That's a bullish environment. Like that a lot. I'd like to see that they broke this downtrend line right there. I was hoping they would have got that done yesterday, but they did it in the pre-market. So the question is it going to hold? All right, you can see prices underneath the 200 SMA right here. That's that 200 SMA falling. That's a falling 200, falling all-time high anchored VWAP. And price action for the 17th, that was yesterday. Notice We made a lower low, all right? So, there's no telling where they're going to bounce. And look where they bounced, right here at the upper third. Okay, right on that support area. So now we made a higher low, no higher high yet. We made a high here, we made a little higher high here, but we haven't broke this. Okay, now we finally broke it in the pre-market to produce that higher high on the 15-minute chart. So as of right here, we're in an uptrend, making a higher low and a higher high. So 15-minute is in an uptrend, but still caught underneath the falling 200. So we need to negotiate this falling 200, consolidate above it, and then start melting our way back up. So that's FNGU on the 15-minute chart, finally in a 15-minute uptrend. All right, so let's take a look at US dollar index. All right, so you can see this is the 2025 high right here. Then we produced a series of lower highs and lower lows. There's our downtrend. Now we're in a bear flag that started in June. So we are in this 6 month, 7 month, 8 month bear flag right here. And we're in a downtrend because we've got a high, we got a low, we made a lower high, we made a lower low. So we're in a downtrend. Okay, now if they take out this high, they will negate the downtrend and convert the uptrend. All right, if they move over to the right, there'll be another bear flag. Currently, they're in a downtrend in a big bear flag. All right, and that's the US dollar index right there. Now, as consumers, you guys know, the consumer in us hates a weak dollar because that means, the hard dollars that we work for, all right, all the sweat we put into earning a paycheck, all right, winds up not going as far as it did last year, okay? That's what happens when you get a weak dollar, all right? So, but the investor in us, okay, we like the weak dollar because what it does is it makes our goods and services more competitive when we go to price them overseas or in foreign markets. So in other words, they become more affordable for foreign markets to purchase our goods and services. And therefore, what we wind up doing is taking in more revenue. So we're going to be looking at GDP this Friday, all right, to see if we are, in fact, taking in more revenue. In the past, we have been, all right. In the recent past, we have been taking in more revenue. Now, if management's got their act together, all right, that top line increase, which is the revenue, all right, if they've held their margins right, in other words, their labor margins, their materials margins, okay, if they held the margins in line, they should equate to higher earnings per share. And whenever you get higher earnings per share, what happens? Well, the share price, all right, for that product tends to grow and elevate higher and higher. And that's why we got all these new all-time highs, okay? So we'll be looking at GDP this Friday. So that's the US dollar index. Let's take a look at the economic package, see what's going on there. We're going to review Max Payne one more time because they tend to change it on me. All right, one more time. And Max Payne is still 682. And the put-to-call ratio is still 1.1 put for each call for today. All right, so as far as the earnings go, today's Wednesday. We got HSBC Holdings sometime today, 292 billion. They're going to report sometime today. Analog Devices, 164 billion. Booking Holdings, 133 billion. Rio Tinto, 123 billion. Again, all of these familiar names, but nothing here is going to move the markets. Okay, nothing here is so big that it's going to move the markets. Thursday, Walmart, see, there's $1 trillion right there, okay? That's a market mover. Alibaba going to report sometime on Thursday. Not sure when. John Deere or Deere & Company, 162 billion. sometime actually in the morning on Thursday. Newmont Mining, 133 billion in the evening on Thursday. Southern Company, I think that's copper, I'm not positive, $101 billion in the morning on Thursday. All right. All eyes going to be on Walmart. All right. Big time retailer. That's a market mover. All right. So $1 trillion is going to report this this Thursday in the morning. Friday, we've got everybody is under 100 billion dollars. So all familiar names. Lamar Advertising. You've seen the billboards on the highways. Okay, that's Lamar right there. Okay, so all of these, nothing here is going to be market moving at all. All right, so but they will help out their sectors. So there's Friday for earnings on Friday. Let's take a look at the economic calendar. Thank you, Alan. Thank you, Ed. All right, so today is Wednesday. We've got a delayed report for durable goods coming out at 8:30. Already came out. Okay, now we've got 3 delayed reports for housing starts and permits. Okay, so if you didn't like the first one, you got 2 more coming. All right, so all coming out at 8:30. All right, so they're all delayed reports, each one of them. None of them is current. All right, so we'll take a look at that. It's not going to mean a whole lot, being since they're all delayed reports. We'll be looking for something more current. All right, so then we got international industrial production, 9:15. Atlanta Fed business inflation expectations at 10. And then that's it for the rest of the day, except for FOMC minutes at 2. All right, so there'll be a little bit of volatility happening right around 2 p.m. We'll see what happens with that. Fed's going to be talking about cutting rates or raising rates. I don't think they're going to do anything, in my opinion. I think they're just going to leave things the way that they are, only because the economy's doing fine. There's not a lot of layoffs, but there's been a few closings, but not enough to really warrant any immediate reaction. So probably not going to be much with the FOMC minutes at 2 p.m. today. So you got housing starts, durable goods. We're just going to take a peek at it. All right, so as far as durable goods go, new orders month over month, they have a consensus range of minus 5.1% on up to positive 1.0%. So the actual was minus 1.4. So we fell within the range on the durable good orders, okay? On the transportation. Remember, we had the tariffs, all right? So, having some durable good orders decrease, and I don't know if that's import or export, all right? So we'll see, all right? Transportation, month over month, 0.2 to 0.4, and the actual was 0.9. Hopefully it's exports. Actually, I hope it's domestic, all right? So if it's domestic, that's good. All right, core capital goods. The range is 0.1 to 0.2. We came in at 0.6. So if those are domestic, I mean, that's probably really, really good numbers. All right, as far as orders go, that would show us people are buying and the economy is thriving. So that's very good for the durable good orders. All right, take a look at Thursday, tomorrow. We got international trades in goods and services at 8 o'clock, jobless claims at 8:30, Philly Fed manufacturing index 8:30, and then we got pending home sales index 10. Another delayed report, leading indicators at 10. Natural gas report at 10:30, and my favorite, which is GDP at 8:30 on Friday. Okay, so as well as personal income and outlays, which is a delayed report at 8:30 on Friday as well, right alongside the GDP. Then we got new home sales at 10 and another new home sales, both delayed reports at 10 o'clock. All right, that's it for me for today. All right, I am not for today, but for right now. I'll be back in 30 minutes, and I will open up the markets with you guys. Let's take a look at SPY, and we'll look at it with the pre-market on there. Okay, so we can see what's going on. That's not what I wanted to do. All right, so we're at 684. We still have consolidation. I don't like the downtrend. All right, we got like see kind of a 10-minute downtrend right through here. Don't like the downtrend. But we do have consolidation or price action over prior price action. That's bullish. But the downtrend, you got to follow the trend. I would be looking for this to reverse somewhere around here at, well, right here, right at gap fill. Okay, I would look for this to reverse. If it gets below gap fill, see this consolidation right here, all right, I'd have to be a bear. Okay, below this, all of this, I'd have to be a bear. Above this, I would be looking to pick off lows, all right, for a return trip back up to those highs. Okay, based on what's going on in the FNGU, all right? So look for this to probably get a little bounce right off of this area here. All of this consolidation right off of this area as well. All right, so we'll see what happens. If this fails to hold, then we're probably coming down to test the lows again. All right, but right now, got a bullish bias. I'm looking to pick off the lows, and we're currently in a 10-minute downtrend, which I don't think will last below this, but it might. So again, I'm not willing to trade it till it gets below this area right here. And that's my plan for this morning. So I'll see you guys in about 20, 30 minutes.